I think Bill was afraid, having sat on a number of investment committees and told people that investment committees should always be an odd number and 3 is too large.
It's a good one.
I had this maybe 2-year break where I didn't travel to India during COVID and came back, and Reliance Jio had taken off, right?
To kickstart the conversation, Lee, for those who don't know the Dietrich Foundation, could you tell us about what's the story behind the foundation? How did it come to be, and what are your objectives?
Of course. Well, we love talking about Bill Dietrich and his vision. So Bill Dietrich inherited a steel products company here in Western Pennsylvania from his family. He grew it to a $400 million revenue business, sold it in 1996, took home $175 million cash, and decided at that moment in his mid-50s, the whole life ahead of him, he wanted to give the money away. So he would spend the next almost 20 years investing that cash to grow a charitable trust as large as possible that would ultimately fund a foundation to benefit higher education in Western Pennsylvania. And he did that by investing all around the world. And when he passed away in 2011, that charitable trust funded the foundation. And so we're up and running today, distributing money to the pre-identified support organizations that Bill really wanted to highlight and focus on, so that higher education in Western Pennsylvania would help the region continue to transition from Rust Belt steel town to more of a 21st century hub of innovation with artificial intelligence and life sciences and robotics. And hopefully some of that talent that came to those universities would stick around and create jobs in our region.
That's amazing. So he decided to give all his wealth to the foundation.
Yes, Bill, I think first of all, I should say, I never met Bill Dietrich. So what I tell you about Bill is just the oral tradition that we have in the office, and having met a number of people that knew Bill very intimately. I can say that he was very touched by Andrew Carnegie, Henry Clay Frick, Andrew Mellon, H.J. Heinz, these industrialists in our backyard that at the end of their life gave it all away. I think he took to heart Andrew Carnegie's gospel of wealth when he said, "A man who dies rich dies disgraced," and that amount of wealth was a societal obligation.
And when we go around Pittsburgh, we see all the universities, the museums, and there's a little bit of impact of Dietrich, right, across all of these. So can you talk about who are the organizations that you support?
Yeah, so the largest portion of the annual distribution, like I said, goes to higher education. So Carnegie Mellon University in our backyard here is the largest beneficiary, and the University of Pittsburgh is the second largest beneficiary. There's another 13 support organizations. There are some other universities, colleges, civic organizations, and cultural institutions. But it's really CMU and Pitt. And of course, so at CMU, it is the Mariana Brown Dietrich College of Humanities, and at University of Pittsburgh, it's the Kenneth Dietrich College of Arts and Sciences. So he wanted to name kind of those two major gifts after his parents.
Very nice. So apart from the capital, Bill Dietrich also left a statement of his philosophy and what he would like the foundation to be. Can you talk about what was the statement of purpose that he had left behind along with the foundation?
Yeah, so it's a 16-page statement of philosophy where Bill articulates both from a governance perspective, how he wanted us to operate, from a cultural perspective, how he wanted us to behave, and also just some of the kind of nuance of naming the gifts, et cetera, but really focusing on emphasizing that the Dietrich Foundation will act more like a business than a charity, right? He talks about how paradoxically, we would look more like a business than a nonprofit. And that's reflected in the fact that we wear a suit and tie to work every day. That no one in our office is looking at grant proposals because Bill, as we say, controls that from the grave.
Right.
He didn't want future generations of trustees to change his mission, really. But that's a gift to us because that means everyone in the office is 100% focused on investing. So I tell GPs that visit us, We don't read grant proposals, we read PPMs.
Right.
Our CIO describes us sometimes as a global fund of funds with perpetual capital that doesn't need to do any fundraising. So it's kind of this dream job in the sense of just deploy the capital, grow the corpus as large as possible, and every year distribute out kind of mechanically to those 15 supported organizations a larger check, ideally every year.
That's amazing. So you know exactly the impact that you're going to have and what you're stewarding the capital for. It's already pre-written.
Yeah. So the universities and those 15 support organizations get to decide each year the purpose of the money, right? So whether it's going to go to scholarships or to endow chairs for recruiting world-class professors to these universities, or to sponsoring a STEM camp at a Scouting America day camp, right? So the head of these organizations get to decide the purpose, and our board of trustees approve that every year, but it's the organizations that are predetermined.
Awesome. That must be a great motivation and inspirational context to go to work, right?
It's in our backyard, right? So the one organization outside of Western Pennsylvania is Princeton University, where Bill attended. But the vast majority of the philanthropy from the Dietrich Foundation is right in our backyard that we get to see.
Right.
And so it's phenomenal when we occasionally get a surprise letter from a student that says, I don't know who to address this to, but I wanted to thank somebody. There's no way I could have gone to Carnegie Mellon, University of Pittsburgh without this scholarship. And you changed my life. I just wanted to tell someone. So when we get a note like that, you can imagine it goes up on the refrigerator in our lounge.
That's amazing. And Lee, how did you end up at the Dietrich Foundation? What has been your journey? And how did you come to decide to join the Dietrich Foundation?
Well, I'm not from Western Pennsylvania. I grew up in the South in Birmingham, Alabama. Went to Vanderbilt University in Nashville, where I did ROTC, so Reserve Officer Training Corps for the United States Army. When I graduated from college, 6 days later or 9 days later, I reported to an Army base. And so commissioned as a lieutenant in the Army, did 4 years of active duty there.
Wow.
But most importantly, I met my wife in college. And so while I was in the Army, she was going to law school. When I got out of the Army, she had passed the Pennsylvania bar exam and was an active attorney. And she told me, I'm never taking a bar exam again in another state, so you can figure it out in Pittsburgh. So in 2010, I met Ed Greffenstedt, our CIO, but I ended up taking a different job with Bank of New York Mellon at the time in corporate development.
In Pittsburgh?
In Pittsburgh. Thank you. This was after the financial crisis. And so the bank was selling off a lot of assets to increase their capital ratios. And after 5 years of just selling things, that becomes a little less exciting. So in 2015, I joined the Dietrich Foundation and have been there now a little over 10 years.
Awesome. So just like Bill Dietrich, you went to the Army.
Bill was in the Marine Corps.
Right. Right.
Yeah, so a little different, but I think we both took away kind of the structure, rigor, discipline, and self-initiative that is expected from the military.
Right. And what learnings from your time in the Army do you see in yourself as an investor?
I think one of the main things that affect me from being in the Army is perspective and maybe risk tolerance, right? So my wife gets frustrated with this sometimes because she'll be upset about something, and in the back of my mind, I'm thinking it's really not that big of a deal. And I'm sure that this happens countless times. But I think that given the perpetual long-term nature of our portfolio, perspective reminds me that, these little headlines that come across or a tweet or something like that seems earth-shattering at the time, it's really not that big of a deal. Let's focus on these long-term trends. Let's focus on the things that we can control. And so the Army probably instilled that in my personality at a young age.
Right. And you spoke about long-term strategy. So how do you create the investment strategy for the foundation? Are there any guiding principles in the statement of philosophy that Bill Dietrich passed along?
Well, he wanted private equity to be the growth engine of the portfolio. He made that quite clear. I think one of Bill's Hall of Fame moments as an investor is focusing on governance, right? And so Bill was really focused on the fact that we could have some sustainable long-term advantages. given the perpetual nature of the portfolio, given the pre-identified support organizations, we could afford to invest in a highly illiquid manner, which we believe is advantageous in the long run.
You spoke about being very long-term. How is the investment strategy at the Dietrich Foundation decided? Are there any principles that Bill Dietrich passed along in the statement of philosophy?
So in the statement of philosophy, Bill wanted to emphasize that, and he put in, articulated that private equity should be the growth driver of the portfolio, and that we should be expected to have a top performing private equity portfolio relative to the perceived best performing endowments, foundations, institutions in the world that look a little more like us. And so we inherited that portfolio, right? That's what he had in the charitable trust. That's what worked for him to grow it from $175 million to about $500 million when he passed away. It has worked for us. We continue to believe in, as long as human beings are running companies, that there will be opportunities to build companies at the earliest stage and profit off of that, or buy companies and improve them and profit off of that. But you really do that in private markets. And we wouldn't see those same levers or value creation opportunities in public markets if we had a portfolio that was trading the proverbial Merck versus Pfizer on a daily basis.
So is it fair to say your portfolio is largely private equity versus public equity?
Yeah, I just think you could safely say that our portfolio that's 90% illiquid is focused on smaller companies, private markets,
right?
And whether that's at the venture capital, entrepreneurial business creation stage, or that is lower mid-market leverage buyouts where we're purchasing an existing family-owned business and improving it and selling it on years later to perhaps another financial sponsor or a strategic within that sector. But the portfolio really is highly focused on early stage venture capital, bootstrap growth equity, and lower mid-market buyout.
That must be a very exciting portfolio to have 90% in venture capital and private equity. But how do you kind of think about risk management? Given that you're a foundation, of course, you have a very long-term horizon. How do you sleep at night with, such a high allocation to venture and private equity?
Well, we take some comfort in the fact that it's a seasoned portfolio. So it's generally distributing out more cash, and it's our job to put, proverbial logs on the fire and keep the fire going. So it's a established, mature portfolio that we have a fair amount. We have 20 plus years of data where we can model expected cash distributions. We have a large line of credit that's undrawn. So if we needed to make distributions to our support organizations or meet our capital calls, God forbid, we could use that. And also there's a robust secondary market. Not that we plan on selling anything, but we take comfort in the fact that we can get bids on pretty much everything in the portfolio.
So it's not as risky as it seems, right? Because you've got that institutional knowledge as well as depth in your portfolio.
I think so, but it's also a broadly diversified portfolio, right? So even though we're focused on certain asset classes, this is a portfolio that's invested across 20 plus years of vintages that's active in the portfolio today. So we have this vintage diversification. We have a geographic diversification, and then there's countless sector diversification across all the different businesses. So if something goes wrong in the night, as they say within our portfolio, it's probably limited within individual companies. And in such a broadly diversified portfolio of funds, our individual exposure to a single name is limited.
Right. Lee, are there any pivotal moments or experiences from early in your career that shaped your investment strategy?
I don't know if it shapes my investment strategy, but my perspective and a little bit of a cheat code I always have in my head. So I was talking with a local successful businessman who invested in Stan Druckenmiller, famous hedge fund, in the early 1980s, right? Before Stan had this phenomenal track record with George Soros, et cetera. But I asked him, how did you know to invest with him? Because this isn't your day job. Your day job is your construction business. And he said, he talked about companies and investing the way I talk about cars to my friend. You could just see the passion. And that's how I knew. And that's such a simple story, but it's always stuck with me. And the best GPs in our portfolio, you can't get them to stop talking about their portfolio and the companies and the team. It's just, they're thinking about it 24/7. And I feel like you can't fake that. So I always have that in the back of my mind. He talked about companies the way I talk about cars. So I'm obviously a lot more complicated than that, but I just have that in the back of my head.
And you spoke about the best GPs in the craft. So what are the attributes apart from this that you look for in a world-class GP?
Well, I think that passion is a byproduct of some of the personal qualities that seem to make people successful in this business. One is just insatiable curiosity, right? When we meet with them, they have just as many questions for us as we do for them. I think that also shows up in kind of a quote, prepared mind. When I can ask a GP a question that I think is fairly nuanced, and maybe is referencing something within their portfolio or broader in the market, and the GP has an incredibly articulate, clear, logical answer, that prepared mind and clarity of thought is something that it's probably part of just their daily being, and you can't fake. And the last one would just be a humility, right? I think that this awareness that you don't know it all, you don't have all the answers, you're not completely sure, right? We want confident managers, but we want managers that are also like self-aware. So those qualities, but that all kind of shows up in the passion of the manager.
And are there any lessons that you learned early in your career which you had to unlearn, or any beliefs that you had to question?
I would say this probably just comes with maturity and time and reps, but I probably at one point overemphasized pedigree, right? Did you work at the right funds? Did you go to the right school, etc.? I think that that's a bit of a lazy filter. I've met enough very, very successful people, whether those were entrepreneurs or they were GPs, that went to a school you've never heard of and worked at companies that you didn't know exist, but man, they can print money. So I think that just being open-minded to people's backgrounds, and looking for that passion, that clarity of thought, curiosity, humility, that's a better way to do it. And you only do that by spending time with people, not by just looking at their CV or their resume.
And all those people, did they have that quality that you referenced earlier, that they could talk about their craft?
Yeah, it goes back to the passion, right?
Yeah.
I think that that's all encompassing. That's a byproduct of these things. They're not talking about their classmates at some school. They're focused on this thing that they can't stop thinking about, which is investing.
And you spoke about going beyond just the pedigree or the past credentials, right, of a GP. Don't these have high weightages in ICs? When you look at the Dietrich Foundation, how are you geared up to make decisions differently than a typical LP to make sure that you don't overlook some of the folks that may not have the same pedigree?
Yeah, and don't get me wrong, having worked at a phenomenal world-class company, a bulge bracket investment bank, a top consulting firm, having gone to these great schools, those are all very powerful networks. My point is that it's not, you shouldn't use that as a filter.
Right.
But we're fortunate, perhaps even spoiled, to not have an investment committee by design, right? So Bill Dietrich really wanted to make sure that the investment staff was held accountable, but had the alignment and the freedom to make the investment decision. So our trustees have delegated that investment discretion to our CIO, and it's our job to convince Ed, our CIO, that these are the best ideas that we can produce, having combed the world, and are worthy of being added to the portfolio. I think Bill was afraid, having sat on a number of investment committees and told people that investment committees should always be an odd number and 3 is too large.
It's a good one.
Ed wanted him to write that down. Was that, you have a staff that is spending all of their working time trying to produce this. And if they are forced to summarize something in a 15-minute presentation to a panel of volunteers that may meet bi-monthly, if they don't present well, that idea could just die, right? As opposed to having a group the CIO who has been along with the diligence journey with the staff, has talked about it, throughout the week for weeks on end, and is very comfortable and has participated in those meetings directly with the manager, maybe even gone to see a portfolio company, that he has, or she, but Ed right now has the all the alignment, the experience, and done the work to say whether this is a good investment decision versus just a brief presentation to a committee.
And talk to us about the geographical diversification and what's the story behind that? Because you've been in Asia long before any of the US investors were there directly. So can you tell us about how that came to be?
So we somewhat inherited in the portfolio. Bill had traveled to over 40 countries while he was alive, and he was very aware of home country bias, that investors might fall prey to thinking just because something is easy and available in my backyard, those are the best returns. But it turns out there's an inherent advantage in just getting on a plane and going other places. And Bill had also had a PhD in political science and written a book about Japanese industrial policy. So we inherited a portfolio that was created from this worldview. And I think that we've also, each individual on our team today, seen the returns that are outside of our backyard, right? So you have a couple 10x plus returns in Chinese venture capital in its heyday. That teaches a very powerful lesson that I might not be able to replicate that here. And if there are other markets where we are the intrepid and willing to go find managers that where it's a little less competitive from a institutional LP perspective, right? That will be rewarded for that. So we have our own experience, and we inherited that from Bill. In India in particular, we've had folks years ago say to us, "Oh, there's such a large world out there. India's difficult to get to. Maybe it's uncomfortable when I'm there." That's music to our ears sometimes.
So what does it take, Lee, when you want to underwrite India in terms of being on the ground, or how many people do you talk to? What is the kind of work that you need to do to have that conviction in a geography that most LPs may find too uncomfortable?
Well, it's a long process, I would say. And back to the governance perspective, we don't have, quote, buckets to fill from an asset allocation, right? So there's not some benchmarking or anything that our CIO tells me, okay, we have a 5% India allocation, now go fill it. It's more bottoms up perspective of where do we think over long term we're going to find the best returns, right? And so look for growth opportunities in emerging markets. That started with China. And then, as I mentioned, so many LPs started to focus on China. We were looking for other places where we could redeploy as we rebalanced our portfolio that had become kind of overweight China into other growth opportunities. So Ed, our CIO, assigned each of us on our team to kind of look at some other places, whether that was Latin America, Africa, Southeast Asia, or India. And at the time, I was the youngest person on our team, so I got the longest plane flights. And also was just happy to raise my hand and say, I don't know anything about India. I've never been to Indonesia. Sounds like an adventure. So just to kind of walk you through what that process was and why I said it takes a long time. Probably 2016 is when Ed gave me some marching orders like this. And it became take every meeting that anyone will offer. So if an Indian GP comes through via placement agent, take the meeting. If you go to a super return conference and have all these side meetings with anyone that will talk to you, do it. Just start to get reps and hear what the different opportunities are for investing in India. Because we had spent probably 2012 to 2016 focused more on China than on India. So there was a little bit of a lull for us. So I was kind of this fresh perspective to build repetitions. So we started to have some better sample set to say, this is an average pitch, or this is exceptional, or this is very poor walkway. So that just takes time to take all those meetings. And then also getting on the plane, right? Going to Bangalore, going to Mumbai, and spending a week with anyone that would talk to me, right? Usually when you're walking around saying I'm a US LP from a foundation, I want to deploy capital, people will make time for you. So that isn't necessarily the problem. And then also just starting to look at those returns and how they compare to what else we could get, whether that is in Southeast Asia, Latin America, Africa, because we didn't have a bucket to fill. So is this compelling? And is it compelling because of macro trends? Is it compelling because we're finding phenomenal GPs that just have the talent to make money in any environment? How do we assess that? And then kind of come back as a team and say, all right, we're excited about India having done all this work. Can credibly say we've met with countless groups, made the trips, spoken with other LPs that are doing similar work. What's the consensus? And now let's narrow that down to deploying over a measured period and adding one or two new GPs over every couple of years. And so that's how we ended up building out a portfolio.
If you look at India, right, 10 years from now, what do you think global investment managers may have got wrong about the India allocation?
I think we could look back, and I'm hopeful about this and probably have some career risk on this, that they were underallocated, right? That continue to say it's just too hard to do. There's so many investment opportunities within the United States or maybe even Europe. We'll focus there as opposed to trying to put in the time to go meet all these managers, actually travel across India, see the companies and do the work that, fast forward 10 years from now, I think there could be some regret that allocators were underallocated to India.
And with your high allocations, right, to VC and PE, your 90% in venture capital and private equity, how do you train yourself for patience and working towards the long term?
That was probably the biggest adjustment when I first started, because I had gone from the Army, where you had like a sort of a daily mission, to corporate development at a bank, where you're constantly looking at transactions, whether they're going to go through or not, but there's always something else on the horizon, to a job where you may not have a lot of information. You have to make a decision or recommendation for investment. It's millions of dollars, and you're not going to know until 10 years from now whether that was a good idea or not. Oh, and by the way, in the meantime, you're probably going to have to commit to one or two other funds from that same manager before you even have the evidence from the first fund.
Right.
So I think that it's over time developing confidence in process, right? We have good process. And if we feel like we're doing the hard work and are debating it internally, that the process is what will pay off in the long run. And I've been here now for a decade and seen and believe that we have strong process and that it is paying off. And that's what I hang my hat on.
How much weightage do you give to data? Because it is a nascent ecosystem. So track records would be limited compared to, let's say, the US market. Mm-hmm. And similarly, there would be a lot of promise that you need to underwrite. Since you're going early into markets, you were early in China, you were early in India. So how do you think about what are the metrics or qualitative aspects that you look for when you underwrite a manager?
Well, it might be a nascent ecosystem, but I would say the managers that we have invested with had established track records. And they weren't just, I'm a former entrepreneur, maybe employee number 27 at a proverbial Flipkart, and I want to go raise a venture fund. We haven't invested with groups like that. And so we did have track records to look at. We did have portfolios to discuss and really understand why GPs made decisions that they made. You're still in this company when others have already exited. Why? You passed on this company that we heard that you saw. Why? So there was a data there to discuss. It wasn't just the hope and the story and the promise. So that was our approach, right? Right or wrong, we could have missed on some young, quote, unproven talent that was just high potential. But we've chosen primarily to do kind of some more established teams.
And what attracts you to India today? What comes to mind when you think about India as an opportunity?
The India stack, right? This digital leapfrog. And I've been able to see it live, starting with these trips where you could kind of hear about mobile adoption picking up. right? And then I had this maybe 2-year break where I didn't travel to India during COVID and came back, and Reliance Jio had taken off, right? Just that whole availability of data and cheap smartphones. But then to go back on that next trip, it must have been April of 2022, and to look outside my cabin, everyone has a phone in their hands, right?
Yeah.
So that's one of those things that you can read about, right? You can read about demographics, you can read about digital adoption, but unless you've been there a few times to have this comparative of before and after, it really shook me. And even to the point with like UPI, when I talk about digital stack, to now having gone enough times where if you go to pay for coffee and I'm pulling out cash and people are annoyed, right? And it wasn't like that before, right? So to see how fast that has come.
Right.
So I can get myself really excited about all the secondary effects of this digital leapfrog, right? Whether that's mobile education, right? Some really high potential kid in a tier 4 city that doesn't have access to perhaps the same education that someone from an elite family in Mumbai might have as it's called an 11-year-old. But now because they have the opportunity to look at a phone and learn something, fast forward 30 years, they're going to be solving some, breakthrough at IIT that's then going to lead to a space, investment. So it's a big jump to make, but it's easy to have that optimism when you think there's 1 billion people here that now have tools, whether that's credit, right? Because of the ability to have a bank account, right? To establish sort of an informal credit score and then to get a small loan for their business, or that's an 11-year-old in a small city being able to achieve something in their education that they wouldn't have otherwise. There's going to be so many effects in the future from this, right? Whether that's business creation, scientific breakthroughs, there's a lot to be excited about. 1 billion plus people that are going to reach their full potential.
It's 1.4 billion now. There are a lot of us in India. But 10 years back when you first visited India 9 to 10 years ago and today, has it exceeded your expectations?
Well, we're just now, given the long tenure of funds, we're just now starting to see kind of data within our portfolio. And so I would say, yes, those earliest funds, are meeting our expectations. Some of the more recent ones have something to prove, but that's universally true. I think that I'm very pleased to see developments within the India venture ecosystem, to be specific, of more specialized funds, right? I think that is an important stage in the ecosystem where to be competitive, I have to have some expertise as opposed to just a generalist VC that has cash and some experience guiding startups. Now you have to be able to articulate to a founder why you are the best fit. You have to be able to articulate to an LP why you have the most edge to really outperform. And so I've been very pleased to see that evolution within the ecosystem.
How do you think the ecosystem for IPOs and exits is developing in the Indian ecosystem?
It's quite favorable. I mean, I think that's what a lot of people would be surprised. If you were an allocator that was focused on India, and let's say 2014 timeframe, you were probably very frustrated about having a lot of exposure to Flipkart on paper, right? But with no end in sight. And then meanwhile, you have colleagues who are, or peers that are seeing all this liquidity out of China. I think that at that moment in time, people got a bad taste in their mouth and started to say, oh, India's great, but never get your money back. Fast forward to today, look at the exits within the most recent years, right? Mm-hmm. So you have some US IPOs, and I think that there's a conversation going on within India right now, whether that's the best exit path and the ideal exit path, whether those for tax reasons, or just the local stock exchanges, making it more approachable and accessible to IPO within India. I think that you also have strategics now that are acquiring technology companies. So there's more exit paths than people think.
Got it. And as you look at the Indian ecosystem over the last 10 years, how have your fellow LPs viewed India?
Well, yeah, I'll go back to what I said at one point where we were on the phone with a group that said one time, India's it's too hard to get to. It's too frustrating. So we're just not going to spend any time on it. Fast forward to today, where we probably have a phone call, an inbound phone call from a fellow LP to talk about India once a week. Right? So we've come a long ways just in the 10 years that I've spending more time on India. I've seen it live, right? It used to be the same group of maybe, let's call it 10 to 15 institutions that are about our size that were trading notes. So now, I don't know that we have a reputation, but I think that we now receive a fair amount of inbound inquiry to ask, who should we be talking to within you're trying to leverage whatever experience or scar tissue we have. So it's come a long ways from trying to find someone to talk about it versus now getting, kind of inbound calls because people are focused on allocating to India because the story's out.
Right, right. And what do you think from an LP perspective of investors and allocators who are thinking through Pan-Asia versus country-specific funds? Have you seen any differences in those strategies?
We haven't focused on multi-billion-dollar Pan-Asia strategies. Not to say they aren't successful, but I think that's for a different allocator that has a lot more capital to deploy. We generally, and this isn't India or anywhere, but generally believe smaller funds over long periods and large enough data outperform larger funds. I think just the math is there, right? It's easier. I shouldn't say easy, but it's easier to triple $300 million than it is to triple $5 billion. And since our size allows us to participate in those smaller funds, that's generally where we focus. But also we like kind of local in-market expertise, right? So we've had more success investing in the domestic Indian manager than investing in someone that invests in India via London.
Right. And what are some of the characteristics of a GP that becomes a multi-fund relationship for you? Are there any characteristics, attributes that you have noticed in GPs that outperform for long periods of time?
I would say consistency of partnership is a big one. So if we have identified a group, let's say before our first commitment, that we think has the raw material as a team to really deliver and find great entrepreneurs and manufacture great exits and liquidity for their LPs. So if we identify what we think is kind of the raw material for that, the biggest way to screw that up is within the partnership, right? So if you have one of the founding partners, perhaps, who has outsized economics relative to the rest of the team, and fast forward, surprise, the rest of the team gets frustrated with that they're doing more work and not being compensated for it. So the GPs, the groups that have endured over multiple funds, multiple vintages, are the ones where internally they've worked through their own partnership and have the respect and feel appreciated, and everyone's an equal contributor. Those are the groups that are consistent. But the quickest way to screw things up is drama within the GP.
And how do you diligence for this? Do you watch GPs for a while and see how it goes? How do you get a sense?
Well, there's some basic things that you can understand, which is one is just kind of carry distribution, right? So we will ask for that. We want to know how everyone on the team is being compensated and making sure the alignment is there. So that's kind of some basic stuff. And maybe also just the GP contribution to the fund. Is that meaningful? And then it's spending time with the manager. So do they have respect for each other? Do they seem like they're collaborative? Do they seem like they're friends? Is one partner interrupting the other partners with a big personality that could become annoying over time? These are the softer skills, but some of just the basic stuff is walk us through carry allocation, walk us through perhaps how the principals or the VPs are going to make it to partner. Has that been communicated to them? Are they being treated fairly? So it's a bit of asking some basic questions, but also just spending time with the team.
Got it.
It's hard to diligence from a data room.
Right. And what would be one piece of advice that you would like to give to an Indian GP in today's environment if they're looking to raise capital?
I would say what I've come across lately, and I think this is just a brief moment in time, is GPs starting the first 15 minutes of the pitch with why India, right? Because I would tell you that the LPs that you want already know why to be excited about India, right? And so you don't need to be so defensive in trying to convince people at a macro level. Start with why your team is the best athlete to be taking on this event.
Got it. And what would be one piece of advice for an LP that is considering India as a potential allocation?
You've got to get on the plane. Yeah. So I would spend time in kind of the three big cities of Delhi, Mumbai, and Bangalore, where you're going to find the vast majority of the GPs, and take as many meetings as you can. There's just no substitution for that.
How often do you fly to India?
It's once or twice a year, depending on kind of the calendars, which when I say out loud doesn't seem like a lot, but given that we have a global portfolio and I have 3 kids at home, it feels like it's
Anything you noticed during your travels to India that surprised you or you didn't expect about India?
I just had no basis for this, but how lovely the trees and the vegetation is in Bangalore. Really? Yeah, I mean, that might be a silly answer, but it's surprisingly beautiful to me every time that I'm in Bangalore.
Right. That's great. And if you were to look at India as a destination for the next 10 years for global allocators,
yeah,
what are the attributes to look for in a manager, right? You had the initial first 15 years of Indian VC and PE. Now going forward, what are some of the attributes that you would look for?
Well, given that we've had now a number of success stories out of India, success meaning a company was created, grew to a substantial scale, went public, and was able to distribute capital back to those early stage investors. We'll define that as success. And we have enough of those successes. You have an alumni base now of people that were there through those whole journeys, right? Whether they were early employees of the company that have big ambition now and saw the company scale, or they were the investors that were there along the way, taking the bet from a concept and an idea all the way to a public company. I would want to be investing in groups that participated in this rise, right? If you told me you had spent the last however many years in a family business and now want to make a sort of a lifestyle change into venture, that's not for us. That might be for other people, but there is I'd want to know who you worked with, who did you admire in your journey, and kind of talk about that front line experience with over the last 10 years and how that is applicable to the next 10 years. That seems obvious, but there's enough charlatans and enough other people out there that will take advantage of hype within a moment. And so you kind of have to drill down whether people were really there, or they were just bystanders and are talking about it as if they were.
And Lee, what is the target return that you target from
India? I would say it's, since we have a best ideas portfolio without buckets to fill, we're looking for probably a solid 2.5x net USD, high teens IRR for our India venture, but that would be the same, I would say, of Latin America or Chinese venture. Yeah, I mean, if we had a portfolio full of that consistently, we'd all be doing great.
Got it.
But you have to have the proverbial 5x to make up for the 1.5x.
Right. And you spoke about the information of private markets not being as ubiquitous, right? So from the Dietrich Foundation, because you're so plugged into the Pittsburgh endowment and foundation ecosystem, do you guys share information about different opportunities, markets? Is that something that you do?
We do, and I hope we continue to do that. None of us are so large that we're going to crowd each other out. So there's no holding your cards close to your chest, because if we're going to write a check, I have every reason to try to pull CMU and Pitt. There are support organizations into the mix as well. And also I value their opinion. So perhaps they see something that we don't. It's an extension of staff. There's no reason for us not to collaborate. acknowledging that we all have different risk tolerances within the portfolio. We all have different existing allocations, right? Something that might be complementary for our portfolio isn't appropriate for someone else's. But yes, I hope that we continue to be collaborative. We sit on most of their investment committees. We have their university presidents as our board of trustee. So there's a whole bunch of reasons for us to be friendly, but I think it's also just logical.
What role has mentorship played in your career development?
I've been unbelievably fortunate to have a few individuals that left a lasting impression on me. So the first was two commanders when I was in the Army. My closest was my company commander, who always had a phrase that stuck with me, which was, in the absence of a plan, your plan is the plan. Take initiative. And I think that I've always carried that with me and wanted to work with people that have that same mindset and hire people that have that same mindset. I had another battalion commander that I was dealing with a difficult situation. I brought it to him. I described it to him. I think I was sort of secretly hoping he would deal with it for me. And he just looked at me and said, "So what are you going to do about it?" And that just cut me to the core, because I realized it was my responsibility to deal with this. And I'm a grown up now. I've got to deal with it. So that was just a pivotal thing of, again, taking responsibility, taking initiative. And then I had a boss in my first job kind of out of the Army that really focused on the people business, or the people side of the business. And I remember him telling me that due diligence really starts at the closing dinner. That's when people let down their guard and they start to tell you the real inner workings of the company. So that's always stuck with me, of getting people to trust you and to tell you things that they might not just display out in the open. And then working with Ed and our team, this is an apprenticeship business. They took a chance on me 10 years ago, and I've just learned from osmosis, from being around phenomenal people. So yeah, I'm unbelievably fortunate, and I tell my wife all the time that I would sell tires with this team if that's what we did on a daily basis, because I just like being around them. I learn, and I laugh more than I ever imagined in this job.
And is this dynamic of apprenticeship, is this something that you look for in your GPs?
From a GP perspective, I would say that I'm sure there's some apprenticeship within firms. We probably like it and see more stability when firms promote from within versus bringing in someone that's a bit of a mercenary and adding them over people who have worked and delivered for you. But yeah, I mean, especially on the venture side, there's not a lot of academic literature that you're taught in school about what's going to be a power law outcome, right? You have to meet with founders and meet with tons of founders so you can say, this person is exceptional. This team is exceptional. Even if it's just a PowerPoint slide at this point, we know that they're going to be successful. That just comes with time.
So I'm going to do a quick fire round with you, Lee. Is there a favorite essay or a book or a podcast that you share with your network?
From time to time, I tend to circulate this article essay that I had to read in the Army that's always stuck with me, called A Message to Garcia by Albert Hubbard. It was really written to highlight the importance of self-initiative and reliability. And so it's always stuck with me 20 years later, and sent it to friends from time to time. And everyone always is like, I know exactly what you mean by this article. And I'll let anyone interested to read it and see what I might think about that.
What is conventional wisdom in the LP community that you secretly don't believe in?
I think I'm always suspicious of people saying that XYZ is the next China, right? So whether that's India is the next China, I think, China's rise within, an investable ecosystem was a unique moment in time. And it makes me think it's sort of a California gold rush. You're either there or you weren't. And people are trying to recreate that. I'm absolutely optimistic about India. I'm optimistic about countless other places where we invest. But I think saying something is the next China always makes me a little suspicious.
Is there any hobby or activity that inculcates that patience in you?
I'm at a stage in life where I don't have too many hobbies, but I will tell you that parenting has definitely given me new perspective on risk and patience.
Your favorite Indian food?
South Indian food, Generally because I don't do well with dairy, so there's a little more broth and spice.
And you can do spice?
Yeah, I mean, I hope so, but I'm sure my version of spice is different than others.
It's probably mellowed down in the restaurants. But great. Thank you so much for your time, Lee. We really appreciate you taking the time, and this will help not just allocators, but also GPs and entrepreneurs in India get a better understanding how an institutional investor in the US is looking at the ecosystem. So thank you so much for the time.
Well, happy to. Right or wrong, this is our perspective, and it's been created by, like I said, the scar tissue and time and experience of hopefully doing the work.